If you've ever deposited a large amount of cash at your bank, sold a car privately, received money from your kids, moved your own savings between accounts, there is a specific pound amount that can trigger an automatic report being filed on you, without your knowledge, without your permission, sent directly to a government agency most British people have never heard of. And here's what should actually worry you. The report itself isn't the problem. The real danger, the thing that turns completely legal money into a full criminal investigation, is the instinct most people follow the moment they find out about this rule. That instinct, that one decision, that's what destroys people. Last year, the British government seized funds from thousands of ordinary people whose money was completely clean, legally earned, legally inherited, legally gifted. I'm going to make sure you're never one of them. Let's start with the rule itself, because nobody explains this properly. Under the Proceeds of Crime Act 2002 and the Money Laundering Regulations, every single financial institution operating in the United Kingdom, every bank, every building society, every credit union is legally required to monitor your transactions for activity that looks suspicious. Now, there's no single magic threshold the way the Americans have their $10,000 rule. But in practice, UK banks almost universally apply internal policies that flag cash deposits at or above £10,000 for enhanced scrutiny. And in many cases, a transaction report gets filed directly with a government body called the National Crime Agency, or the NCA, through a system called Suspicious Activity Reports, which we'll come back to in a moment. This isn't HMRC. This isn't the taxman knocking on your door. This is a separate enforcement agency, the National Crime Agency, receiving intelligence from your bank about your financial behavior. And you won't know it's happened. The bank doesn't tell you. They're not allowed to tell you. There's no letter, no phone call, no notification whatsoever. Federal law in the United States makes banks stay quiet about these reports. In Britain, under the Terrorism Act 2002, tipping off a customer that a report has been filed is itself a criminal offence. So you can be flagged, reported, and under investigation, and your bank teller will smile at you next time you walk in like absolutely nothing has happened. Now, before you panic, let me give you the micro version of what's actually important here, and then we'll go deeper. The report is not the crime. Trying to avoid the report is the crime. Hold on to that, because everything else in this video flows from that one idea. So here's where people destroy themselves. You hear about the £10,000 threshold for the first time. And your brain, trying to protect you, says, right, I'll just deposit 9,000. Or I'll do 4,000 now, 4,000 next week, a bit more the following month. Keep it quiet, stay below the line. That decision has a name. It's called structuring. And in the United Kingdom, structuring transactions to avoid detection is an offence under the Proceeds of Crime Act 2002. We're not talking about a fine. We're not talking about a warning letter. We're talking about a criminal offence that can result in up to 14 years imprisonment. Let me say that again. 14 years. And here's the part that genuinely frightens me. You do not need to be laundering money. You do not need to have stolen the money. You do not need to be doing anything illegal with the money at all. If every single pound is clean, legally earned, legally inherited, legally received, but you deliberately break it into smaller deposits to stay beneath a threshold, you have just committed a criminal offence. 9 out of 10 people who have money seized through these investigations weren't criminals. Research consistently shows the overwhelming majority of structuring cases in the UK involve legally sourced funds. These were people like you, people who got bad advice from a friend, people who thought they were being clever, people who had no idea they were walking into a criminal investigation. Now let's talk about suspicious activity reports, because this is where it gets really dangerous for ordinary people. A suspicious activity report, or a SAR, is filed by your bank with the National Crime Agency whenever the bank believes a transaction or a pattern of transactions might be linked to money laundering, tax evasion, or any other financial crime. Here's what makes SARs completely different from the cash deposit reporting rule. There is no minimum amount. None. A bank can file a SAR on a £200 transaction. A £50 transaction, there is no floor. What triggers a SAR isn't the size of the amount. It's the pattern of behavior, and the software banks use to detect these patterns is extraordinarily sophisticated. It's looking for exactly the kind of thing people think is clever. £7,000 deposited on a Monday, 6,000 the following Thursday, 8,500 2 weeks later. The system doesn't see 3 ordinary deposits. It sees someone deliberately trying to stay beneath a threshold. It flags it immediately. And a SAR gets filed before you've even left the car park. And remember, you will never know it happened. It's a criminal offence for anyone at the bank to tell you. So you could be sitting at home right now, completely relaxed, thinking everything is fine, while a report about your financial behavior sits in a government database. Let me walk you through 5 real situations. These are the exact moments where ordinary British people, good people, honest people, make the wrong call and end up in serious trouble. Situation 1. Selling a car privately. You sell your car on Auto Trader or Facebook Marketplace for £14,000. The buyer turns up with cash. Completely normal. Completely legal. You take that envelope to the bank. What people do wrong. They deposit £7,000, wait a few days, then deposit the rest. That's structuring. Full stop. What to do instead? Deposit the full £14,000 in one transaction. Bring a copy of your bill of sale. Buyer's name, your name, the vehicle registration, the date, the agreed price, both signatures. If the cashier asks where the money came from, you say I sold my car privately and you hand them the bill of sale. Yes, the bank will note the transaction. Nothing else happens. Your life continues. Situation 2. A gift from your children. Your son or daughter gives you £15,000 in cash. Maybe it's to help with home repairs. Maybe it's support after you retired. Maybe they just wanted to do something meaningful for you. Whatever the reason, this is a gift. Now here's what people get wrong about gifts and UK tax. In the United Kingdom, there is no gift tax on the recipient. Full stop. If someone gives you money, you do not owe tax on it. The rules around gifts apply to the person giving the money, specifically around inheritance tax if they pass away within 7 years of making the gift. But as the person receiving it, there is no tax liability on you. Your neighbour telling you to deposit £5,000 at 3 different branches to keep it under the radar? Wrong. Dangerous. Criminal. Deposit the full amount in one go. Have your child write a brief gift letter. Their name, your name, the amount, the date, and one sentence confirming it's a gift with no expectation of repayment. Keep that letter somewhere safe. You're done. Situation 3. Moving your own savings. This one genuinely haunts me. I want you to picture a retired nurse, 67 years old. She'd just lost her husband after 40 years of marriage. While she was still grieving, she decided to close their old joint account and consolidate everything into her own account. £26,000. Every penny of it saved over a lifetime of work. She moved it in chunks. 3,000 here, 4,000 there, a few thousand more the following week. She wasn't hiding anything. She just didn't want to deal with the stress of one large transaction while her world had fallen apart. 6 weeks later, she received a letter. The bank's fraud detection software had flagged the pattern. It didn't know she'd just buried her husband. It didn't know she'd spent 30 years caring for patients. It saw repeated deposits under £10,000 and filed a suspicious activity report. She was eventually cleared. But the legal costs, the months of anxiety, the stress layered on top of grief she was already drowning in. None of it needed to happen. If you're moving your own money between accounts, transfer the full amount in a single transaction. Keep statements from both accounts. Keep the transfer confirmation. One clean move. No pattern to flag. Situation 4. An inheritance. A family member passes away and leaves you £35,000. Your solicitor or the executor of the estate arranges the payment, sometimes by bank transfer, occasionally in older estates, in cash from a safe or a solicitor's client account. There is no inheritance tax owed by you as the beneficiary. Inheritance tax in the UK is paid by the estate before assets are distributed. Once it's been paid, what you receive is yours clean. But if you receive that money in cash and deposit it in installments across multiple weeks, the bank sees structuring, not an inheritance. It's not grief, structuring. Deposit the full amount. Keep a copy of the will, the grant of probate, or the solicitor's letter confirming the distribution. That paperwork is your shield. File it and move on. Situation 5. Pension or benefits lump sum. This one catches people completely off guard. If you've deferred taking your state pension, or if you've received a lump sum payout from a workplace pension scheme, or if you're owed backdated benefits, that payment can easily clear £10,000 in a single transfer. When it lands in your account, the bank flags it for review. That's routine, it's fine. But some people panic when they see a large government payment hit their account and start moving it around, splitting it across different accounts in smaller amounts, trying to make it less visible. Even with pension money, even with completely legitimate state money, leave it alone. The Department for Work and Pensions has records of every payment. Your pension provider has records. The bank can see exactly where it came from. Everything matches. The documentation already exists. Don't create a problem where there isn't one. Now let me talk about what actually happens at the bank counter, because this is where people make their second biggest mistake, right after structuring. A cashier asks you about a large cash deposit. This is completely normal. They're trained to ask, It's part of their legal compliance obligation under the money laundering regulations. What you do? Answer briefly and honestly. One sentence. I sold my car. It's a gift from my daughter. I'm consolidating accounts. Hand over whatever documentation you have. That's it. Done. What you absolutely do not do. Don't over-explain. Don't tell them your entire financial history. Don't say anything like, I just want to make sure this doesn't get reported, or is this going to cause any issues? Those words can end up in the narrative of a suspicious activity report. And if a cashier says, would you like to split this into separate deposits? The answer is no. It will always be no. Don't let someone who's trying to be helpful accidentally hand you a criminal charge. Now, if you ever receive correspondence from the National Crime Agency, from HMRC, from Action Fraud, or from a law enforcement agency regarding your banking activity, here's what you do. Stop. Do not answer questions. Do not sign anything. Do not try to explain yourself over the phone. You say this, I'd like to speak to my solicitor before I respond to anything. That's it. That's all you say. Then you find a solicitor with experience in financial crime or tax law, and you don't say another word until you've spoken to them. There's also been a lot of confusion recently about whether HMRC is lowering reporting thresholds for digital payments through apps like PayPal, Wise, and Monzo. Here's the truth on that. In 2024, HMRC did introduce new rules requiring digital payment platforms and online marketplaces to report seller data to HMRC if a seller makes more than 30 sales or earns more than £1,775 through that platform in a tax year. This is about people selling goods and services through apps, not about ordinary bank transfers between individuals. If you're selling second-hand clothes on Vinted or doing the occasional bit of freelance work through PayPal, yes, those platforms are now reporting your activity to HMRC. But this is about income tax, not about cash deposits. The rules for cash deposits at your bank haven't changed. There is also ongoing discussion at a regulatory level about whether the threshold for enhanced due diligence on cash transactions should be formally standardized across UK financial institutions. Nothing has been legislated yet. But the direction of travel, as with the United States, seems to be toward more transparency, not less. For now, the practical threshold you need to plan around is £10,000. Anything approaching that level of cash deserves your attention and clean documentation. So here's the single most practical thing I can give you today, something you can do in 5 minutes that protects you for the rest of your life. Create a folder, call it transaction records. Physical folder, digital folder, doesn't matter. Every time you make a deposit above a few £1,000s, put 4 things in it. 1. A short note describing where the money came from. 1 sentence. Received £14,000 from private sale of my Ford Focus registration number to buyer name on this date. That's your record. 2. Supporting documents. Bill of sale, gift letter, solicitor's letter, pension award notice, whatever proves the source of the funds. 3. Your bank statement showing the deposit. 4. Any transfer confirmation if you moved money between your own accounts. That folder is your entire defense if anyone ever questions a deposit from 3 years ago. You'll probably never need it. But if you do, you'll be very glad it took you 5 minutes to put together. There's no age exemption from these rules. There's no pension exemption. There's no I've worked hard and been honest my whole life exemption. The law applies to everyone equally, but the people who keep clean records, who deposit their money properly, who don't try to be clever about avoiding reports, they sleep well at night, because they've got nothing to worry about. I've seen too many decent people, honest people who grafted their whole lives, get swept into investigations they didn't deserve, not because they were criminals, but because nobody told them the rules before they needed to know them. That's exactly why this channel exists. If you know someone who's recently sold a property, received an inheritance, or is consolidating savings, send them this video. 20 minutes now could save them years of stress later. Drop a comment below. Have you ever deposited over £10,000 at a bank? Did they ask you questions? What happened? I read every single comment, and the most common situations people share become future videos.